Hello, you're watching The Look Ahead for all of the economic data that we're focusing our attention on for Wednesday. Well, Japan will unveil its final first quarter growth rate. The general consensus is for a reading of plus 0.5%. That's for the quarter. And another very important figure to watch will be the GDP capital expenditure as well, expected to fall 0.3%. Now, the latest decision by Japan's Prime Minister Shinzo Abe to delay a rise in consumption tax until October 2019 has raised even more questions about whether or not Abenomics is working and what to expect from the third biggest economy in the world. So Japan kicks off the day. All right, we're going to stay in Asia then. We're going to talk about China because we've got the May trade balance with exports expected to fall 3.6% for the year and imports to fall 6%, as you can see just there. Now, this data is not only crucial for China, but for how we view the Federal Reserve's interest rate decision in June as well, as investors look for any cracks in China. As we know, China has been at the center of the financial market turmoil this year, and investors will be hoping to find some kind of reassurance that the country is on track. Now, London will be waking up to the reaction from the Cameron versus Farage on ITV tonight, which could possibly cause some headwinds for sterling. Now, there's also industrial production as well for April, due with expectations set at minus 0.4%. That's the yearly number, which points to more weakness in this sector, despite a slight pickup that we had in activity in March, but it was not enough to offset this sharp fall in output that we've endured earlier this year. Manufacturing, which makes up 70% of industrial production, has been hit hard by the crisis in the steel industry, with output almost 2% lower in March 2016 than it was a year ago. And again, another important figure for the UK is the May NIESR GDP estimate. Now, this particular think tank, it's come out with some comments about Brexit. It recently warned of a Brexit shock to the UK economy, suggesting that by 2013, UK GDP would be between 1.5% and 7.8% smaller relative to a world in which Britain stayed in the trading bloc. So they're comparing the two and obviously saying that it would be far weaker if we do leave. Now, finally, we want to talk about crude oil inventories just now. Now, if they do fall, I want to say that it would be for the third time in a row, a scenario not seen since August last year. Now, we've got to talk about the price of Brent with this one because it's hovering near 7-month highs just now. And that's thanks largely to projections for falling US crude inventories. So obviously with these stats, all of that could change tomorrow. So we are going to be watching the price of oil as we do every day, really. It tends to dictate sometimes. All right, that's all from me. I'll see you tomorrow. Goodbye.